Good morning, everyone. Good morning. Welcome again to EVC Leadership Immersion. Today we have Opal Hawkins, and she will be giving a session today on prepare and understand the annual audit process and file your 990 form. And I ask that everybody keep themselves on mute. It doesn't matter whether you're on camera or off camera. And if you have any questions and response, place them in the chat because I will be monitoring the chats. And at this time, I'm going to send it over to Opal so she can tell you a little bit about herself and then get into her session for today.
Thank you, Jeannie. Good morning, everyone. I'm excited to see you all joining and participating in this session. I look forward to a very productive session. I'd love for you to, if you have any questions, to put them in chat. Jeannie is actually going to monitor the chat so I can help in answering any questions you may have pertaining to the session. I just want to give you a brief, little understanding of who I am and why I'm here, and wanted to do this session with you all. I have been in the nonprofit sector for a little over 30 years. I've come up through the rankings from working for Price Waterhouse as an accountant, being a CFO for about the last 20 years with a major and some small nonprofits. As a CFO. I'm currently the CFO for the Joint Center of Political and Economic Studies here in Washington, D.C., which is a Black think tank organization. I'm really excited about being here. And over the course of my years in being in the accounting and finance industry, I've learned a lot through, making mistakes, understanding the financial implications, and to ensure that the audit is within compliance, that as we have our 990, that it's visible and funders look at it and look and understand that we as an organization are at our best and that we are in compliance regarding funding, regarding reconciliations, and that everything from an accounting perspective is as it should be from an auditing perspective. And so with that said, let me go to the next screen. This is going to be a 90-minute session. So it's going to be like an hour and a half. It says to please mute yourself, but as I say, please feel free to add anything in chat. I will be asking you a few questions that you can just in chat, just respond, say yay or nay, so I can help in creating the dialogue as we have our discussions about the finances and auditing and as it reflects or implies or have implications for the Form 990. So I want to say before I go to the agenda, I have working with Jeannie and Lillian for the first, maybe when they had their mission and working with the Flint organization. So I'm very aware of what EVC does. I support it and love the team and know that they're doing such a great work in helping and bringing these sessions to you all to help you understand and get a little bit more knowledge. And you guys are also bringing knowledge to the table that we can all work together and learn from each other. So I think that's so important. What the agenda today, as I said, will be 90 minutes. And what I want to discuss here, even though we talk about auditing and the form of the 990, the content filing and the implications, I think we have to think about the auditor. So my first question to you all, if you can respond, how many of you all are actually have participated in an audit or are the liaison to the auditor that is currently working with your organization? Has anyone participated as a liaison? You have, Charity, or actually working with an auditor as you do your annual audit? Or will all of these topics will be new and that's why you're interested in this session? This is great. So I think this will be great. Okay. So what you've actually presented is great. My goal is to touch on everything as far as selecting an auditor, the implications after you've selected an auditor, what in preparing for what you will need to do to have a successful audit. And then thirdly, after you've had your successful audit, ensuring that that information and financial information is moved forward on your Form 990 that you do on an annual basis. So as you can see, our discussions today, we're going to be talking about selecting an auditor. If this is the first time your organization is responsible for going through an audit, what we should do and discuss when onboarding an auditor, the importance of and benefits of the annual audit, and the preparation and results of a successful audit. Then we're going to take a brief break, and then we're going to come back after the break and talk about the 990, the filing of the 990, and the implications of your 990 when a funder is actually looking at your 990. So when you're actually thinking about bringing on an auditor, there are a couple things you should consider. You should, as whether you're a smaller nonprofit, a mid-sized nonprofit, or a larger nonprofit, your goal is to seek an auditing firm that is working with similar nonprofits of your size, of your mission, and of your goals. Because at that point, when you are going to them and explaining things to them, even though they will have their specific duties that they do as an auditor, it will help in them understanding and putting together their audit package to you as what their scope of work will be in supporting you in the audit. When you are actually thinking about bringing on an auditor, you should ensure that your auditors are CPAs. So people that actually are in the financial realm, that knows the implication of ensuring that your financials are in compliance with the actual accounting policies and procedures that of the CPAs, their review of your work. So everyone on their team does not have to be CPAs, but the person that will oversee your financial audit, your financials that will be submitted to you should be a CPA to review and sign off your actual financial audits. The next thing that is very important, let me say this, and the reason I say a lot of what I'm going to speak with you all about is things that over the years that me myself have gotten caught into not knowing. And then I'm like, oh, I should have reviewed that. I should have understood that. I should have known to push back. Is that when you have selected an auditor, and let me say, you should at least send out a RFP, which is what I mean is a request of proposal for at least 3 auditors. That's after you've gotten some references from other nonprofits or organization your size, and just ask, who do you use as an auditor? Who are they doing a good job? And if after you get at least 3, send out a request for a proposal to them and say, we're considering moving forward and auditing our organization. Can you submit a proposal to us of your scope of work? And that would be, they will tell you how long they're proposing the audit should be, what they're going to be looking for in your audit. They will even say how many staff members will be on their audit team to support your audit. And then they will send you a list of their fees. And so at that time, they should have done the analysis to say, based on your organization, based on your structure, based on your finances and revenue and expenses, we can say that we can do your audit within this fee structure. So let me say to you, because I've gotten caught up in that, have a specific an amount. Don't allow someone to say around this amount or the projected amount. You want a hard, solid amount. Because in the event that, oh, it's going to be projected, let's just say $4,000. And later on during the audit process, as they request data from you, it takes a week longer than they anticipated. They have questions about your expenses that they weren't aware of. You don't want later on, after the audit is completed, they come back and say, due to the week of, took longer than we thought, used more resources than we thought, where now the audit is $5,000. So when the auditor, upon agreement with them that you want them to be your auditor, they will send you what is called a letter of engagement. And all of that information will be in that letter of engagement. So that is a primary thing I want you to keep your eyes open and look at that fee and make sure this is the specific fee. And do not feel uncomfortable in pushing back. Say, is this specific? Is this a specific fee if we move forward? And to say to them, I'm budgeting for this fee. I can't afford to pay more than this fee. And you let them know that upfront. Also, during this time, as you do the initial, as you get referrals, make sure you find out what their reputation is. I say that to say, I have worked with reputable auditing firms, and the reason I spent so much time on the fee is because I actually had someone send me an engagement letter, and after the audit was over, did exactly what I just mentioned to you. Due to we didn't realize it was going to take more time, they actually said, we need to charge you more money. So to me, that's a reputational issue, because to me, that is outside of the parameter of the agreement that we discussed. And so to me, that says something about the reputation of that auditor. So when you're asking, not only asking them, but asking your reference to say, did you have a good audit? Did you feel comfortable with them? And do you feel that you can refer them to me based on their reputation and their engagement with you? And last but not least, see, is it an auditor if based on it's a cultural fit? Does it align with your mission? Are they very similar in styles of what your mission and organization represent? And if you have all of those things aligned, then you will have the right auditor. And I have here, and everyone here will get a copy of this presentation. And if you'll click here, I have actually just submitted, you'll see, and let me share, I don't know why it came on this screen, a list of potential questions that would be, I'm going to put it here. Can you all see? This is the list of potential questions when reaching out to an auditor you should ask. What is your experience auditing organizations similar to ours? How do you ensure the accuracy and reliability of your audit findings? What technology do you use to enhance the audit process? How do you communicate your findings and recommendations to management? What is your fee structure? And is there any potential for unexpected cost? And can you provide references from other nonprofits, organizations that you have audited? Those are some of the questions that I would recommend if you are by chance going out and needing to acquire, if you've never had auditing services before, a new auditor, or if you have an auditor for the last several years. Most of the time, your board will ask that after 5 years, if you had the same auditor, to get a new auditor. So these would be questions you could ask potential new auditors if you're moving forward. So as we move forward, then let's assume that we have the right auditor. We're happy with their services, and it's time for the audit. And it says, what is an audit? For people, ones that have never experienced or this is their first time going through an audit, we'll say it's an independent examination of the organization's financial statements and internal controls. I want to make sure I can still see you all. I want to also, what is their timeline? Some of their strict timelines that can result in pushing back your audit. Okay, I will go through this later. Thank you. That's a great question. And the benefits of an audit. So if you are not in the accounting team or the finance team, the audit is to ensure your financial statements are fairly presented and free of material mistakes. Say, for instance, if you are a program manager or you're a CEO and you're so busy within your own right and you have an accounting team, or you could have outsourced accountants actually doing your accounting. When you bring on an outside auditor and they audit your work, you will be able to be ensured at the end of that audit if everything that is being done is in compliance, to ensure that all the duties and responsibilities of a financial perspective is done correctly for your organization. It assesses the effectiveness of internal controls. That means that you don't have one person doing all of your accounting, because if you have one person that is actually processing payroll, if you have one person that's actually doing the bank reconciliations, the same person doing cutting the checks and actually getting the checks and depositing the checks, even though you trust that person, you could be potentially opening your organization up for fraud. So that's why we call internal controls a segregation of duties. So you ensure you have multiple persons doing different facets of the accounting. And it also identified improvements in your financial management and operations. Why are the audit important to nonprofits? It provides public trust and accountability. It has funding requirements that if you are receiving grants, public funding, that a lot of grant and funders request that you have an annual audit. And they have the ability to see that my funds that I am contributing to this organization is used as I have requested. And I can see that all of their financial duties and they're being highlighted in their financial statements. I can see if I contributed $100,000, I can see they have revenue of $100,000 or more. So I know they're getting more than just my contributions. All of this helps to produce trust and accountability in your organization from a public perspective, from your donors and from your funders, but also the compliance with the regulations from the IRS and your state regulations. What are the audits' importance for nonprofits? As I said earlier, your internal controls is important. It'll help to identify internal weaknesses in your financial process. As I said earlier, even if you had only one or two persons doing your accounting, and even though you're very confident and with these two people, and they're so trustworthy, they've been with you all for years, and you know they will not defraud the organization, your auditor, based on internal controls, will still say that is an internal weakness. And let me say, the reason I speak to that because an organization that I worked with, it was myself and I had an accountant, which director of operations worked for me. And she and I did all of the work. And I constantly went to the CEO, not only just to get additional help, but I said, we are breaking accounting compliance And we are potentially breaking internal controls because we need multiple staff to do the work to ensure and prevent fraud. And my CEO said, well, I trust you, which was fine. But when the auditors did make their note to management, they said, even though Opal has been here for 7 or 8 years, we've had no issues. Technically, there are internal weaknesses because you need multiple staff having segregation of duties. It improves the efficiency and the effectiveness of operations. And then also from board oversight. If your organizations have a board, they want to ensure that the organization is being run properly. Even though the board is over and above more so managing your CEO and president, they also want to ensure that they fulfill their fiduciary responsibilities and in managing the organization. The audit planning. So this will help in answering, Charity, your questions about the strict timeline that auditors could say and push back your audit. So when you reach out to your auditor, and they will specifically tell you in that letter of engagement, we will start your audit on this particular day. We will get your work papers. We expect to complete your audit within 2 months. And usually it's 2 months, but it's based on the complexity of your organization, how much that they are actually, larger organizations has more revenue streams, have more money. But at the time that you're actually reaching out to them, they should be able to see your financials and be able to determine the amount of time to complete your audit. And they will discuss the audit scope of work, the timeliness, the key personnel, and address the preliminary concerns. At any point that through those conversations, that later on, when they're auditing your services, they come across something that was not discussed in those preliminary meetings, that's when there is the likelihood that they can say, wait a minute, we're now incurring something that we didn't anticipate, and the initial scope of work that wasn't initially taken into account when we provided a schedule of time. That is when they have the ability of pushing back and saying, well, that deadline we gave you at that point now could be compromised and pushed back 2 weeks, a month, and even further. But when that conversation comes up, feel free in engaging and saying, okay, understandably, this maybe was not addressed, but can we get a specific time that we need to address this issue and move forward, so I can then start planning to have the meeting with, if you have an audit committee or finance committee that has to review your financials, or even pushing up to the board, I need a specific deadline that I can share this information with them. And as we bring on the audit, and we're actually in the first stage of the audit, they're going to ask for data gathering. And so what they'll do is they'll ask the organization to prepare and organize their financial records, have those ready to provide to them so they can go through those records to determine what they will need as a request to review your financials. So the key things that the audit will focus on is your revenue, your recognition of your revenue. And that means the proper recording and classification of donations, grants, and other income. So I shared with you all, and I'm not sure if you had time. Did anyone get an opportunity to look at those 3 videos that I sent? One of those videos, because I wanted to give you in a video setting, a lot of things that's also going to be covered here. If you all are receiving any funding from, whether it's public, private, in those donations, they can classify and say, and specifically how they want their dollars to be used. And those are called revenue with restrictions. And so if someone says, I am giving you $100,000 and I want 80% of that $100,000 to be explicitly recognized or in the programmatic of your mission and your vision of your organization. Only 20% can go to expenses, operations, payroll. So when your auditor comes in, they will look at your revenue. They will actually pull your agreements and contracts from your funders, and they will ensure that your revenue aligns with what the scope of work of that grant or agreement was. The next is expense recognition. It aligns also with the funder agreement. If you have $100,000 that is given to you in your fiscal year, whether that's January to December or whether it's mid-year, July to June, and the same example, then they would say $80,000 of those funds need to be allocated towards expenses of your mission. So whether they say, in this $100,000, I need you to have convening conferences. I need you to do webinars. I need you to travel to ensure that your organization is reaching out. I need you to do media marketing. Then those expenses has to be coded as in relationship to that funder agreement. $80,000 of that needs to be coded in those expense line items. And then the other 20% or 20,000 can be allocated towards salaries if you had to order supplies or things of that nature. That is one of the things that the auditors will be focused on. And of course, your cash management. That for every transaction that's going to go into your bank, every transaction or cash disbursement coming out, petty cash, anything that's related to cash, you need to ensure that you're doing a proper reconciliation. You need to ensure that you have receipts to show if, for instance, a deposit was in, they need to know what was that deposit for. So keep all of your receipts. If you have an agreement from a funder says, we're going to deposit $100,000 into your account, have that agreement so you can show to the auditor to support that deposit into your account. And last, if you have fixed assets, if you have an organization that has fixed assets and you have a depreciation of those assets. And what that means is assets is anything from your equipment. It could be, for instance, if you buy your staff computers, and computers have a lifespan of, some people say 3 to 5 years. That means if you purchase a computer for $1,000 and you're saying, I'm going to, my fixed assets, I'm going to depreciate that asset over 3 years. That means each year you would have an expense of roughly $300 that you would actually have as an expense for that computer until after 3 years, it will be totally written off. Those are your fixed assets from your building, from your leases and things of that measure. You would have a fixed asset list. So the question is, what if all your funds are unrestricted? Then you have a blessing. Every organization wants unrestricted funds. Unrestricted funds means that that funder says, I trust your organization. I love what you do, and I just want to support you. Here is my contribution to you, and I trust that you are going to use these funds as you see fit and you can use them as you see fit. And that means you just need to show on your deposit that that deposit was made into your bank account, and you can allocate that revenue however you like. So that is the goal of every organization, large, small, everyone wants unrestricted funds. So, and it says too, multiple things. It's a testament of what you are doing and doing right, that a donor says, I don't need the paper trail. I don't need to monitor. I trust them and I know that they're doing what they're supposed to do. So that is,
So, but when we do the audit, it just should be very simple then, right? We're just showing that accounts were received and expenditures were made.
yes.
Okay,
Yes. So you don't need, there will be no restriction. So when you have restricted funds, you actually code them as restricted
right.
funds. And every month, if you have, I'm going to say $1,000 of expense, every month you release $1,000 from your
Right.
revenue to offset your expenses. But when you have everything is actually unrestricted, all of that money can come in when you receive it, and it's cash in, and it's great for cash flow. Because then whenever you have an expense, it just goes against that amount that you have
Yes.
received.
It's interesting because we have a housing program. All of our funds are unrestricted for everything that we do, but we can't get restricted funds. We've had trouble. Isn't that interesting?
That is interesting. So I'm gonna tell you a little bit about that later on, about a lot of the information when funders look at your 990. You need to put more information about your organization there. A lot of times, because your financials are not public documents, but you can make them public. But your 990 is public document. So you need to put as much information in that 990 as possible so funders see what you do. It's like I say the 990 is your report card to the world. And so as funders are looking at you, if you have a very limited scope of what your organization does there, then you've limited your ability for other funders to reach out to you and make donations to your organizations, whether they're restricted or unrestricted. But we'll talk about that later. Okay. We're talking about the internal controls, as we talked about earlier, the segregation of duties, which is very important. But let me say, when you have small nonprofits, that's hard to have the revenue to have multiple staff to do the work, right? So you have to think about, how do you handle that and still stay within compliance and have those segregation of duties? I've been in a position where I was told this is not, this is not to keep us in compliant. The auditor reached out to the board and say, this is not in compliant. And the auditor and my board says, we understand, but based on our ability from a revenue perspective to fund and bring on a new accountant to support that role, we're okay with that. And they asked for the board members then just to write a letter of approval. So every year you do not get hit with a management letter stating the same thing because you do not have the revenue to hire additional staff. What does happen sometimes is you will outsource your accounting to an accounting firm, and they have a whole team beneath them. So they have that staff there. They have that segregation of duties. When the financials come back to you, they have the manager that actually review and approve what their staff have done, and they will send you monthly reconciliations and a monthly financials. So that compliance segregation of duties is already handled if you have outsourced accounting being done. The reconciliations, as we said here, the goal is to do monthly reconciliations of your bank accounts, if you have credit cards, corporate credit cards, and other accounts. It's easier, or say simpler, to catch a mistake if you do it on a monthly basis. If you wait until the end of the year and you can see your numbers are not tied in, then you have to go back months and months to figure out, why didn't I catch it in this month? So if you have the staff and the timeliness, the goal is to reconcile your account on a monthly basis. And the documentation is to have clear and complete documentation of all your transactions. So every transaction that are going to impact your bank statements, a deposit, a debit, when it comes to money moving out, you need to have complete documentation to actually ensure the auditors that we are in control of this. We know what this is, and here's a support receipt to show what that transaction is. And a regular review. I mean, if you have a lead person, actually have them regularly review, hopefully monthly, your financials. If you don't have time to do it on a monthly basis, ensure that you actually know less than on a quarterly basis. Preparing for the audit. I always like to ask, how soon do you think that you should start preparing for your audit? Do you think 3 months before the audit, 6 months before the audit, or just a month before they show up?
Shouldn't you start at the beginning of your fiscal year?
You should start preparing for your audit yesterday. And what I mean by that is, every document you have, every policy you have, every bylaw that you have institutes how you are running your business. So from the inception of your organization, you should be planning for your audit. It should not be relegated to a year unless you introduce a new program onto your organization. For instance, when you have an employee handbook, if you state in your employee handbook, and they started 2 years ago, that you get 10 days of sick leave, you get vacation, what have you, that is relegated and impacts your financials. So as you handed out that handbook 2 years ago, it's relative to your audit this year. So when you're introducing anything new, you should think about your audit. You should start thinking about the implications of how this will affect my audit. If you're actually going to cover your staff for healthcare insurance, and you have that in your handbook, you need to be able to, when your auditors see that invoice from your healthcare provider and they see the money moving from your account, you need to be able to tell your auditor, we are incurring this expense because we actually cover our staff. It's in our handbook. So some people think, oh, it's just about the transactions. It's about how you stand up your organization from your policies, your procedures, and your bylaws as well, that will impact your annual audit. Data accessibility. So what I do, and I have my staff to do, and it's like trial and error, right? I have perfected it over the years because I've made so many mistakes myself, we have a shared drive, because I have been years ago, roughly about 20 years ago, when the auditor comes, I know what they're looking for. I had it all over the place. Oh, let me find that for you. Oh, I know what you're looking for. I have it here. And I realized, I'm like, I need all of that data in a specific place, so that when the auditors are here and they're asking me for, where's all your bank statements? I have a folder on the shared drive that says bank statements. And if it's for 2024, I have a folder says 2024. And under that, I'll have a separate folder for bank statements. I have a separate folder for accounts payable. I have a separate folder for invoices for healthcare. I have a separate folder for if I receive funding and emails and grants and agreements. I have a separate folder for them. So when the auditor comes, I go to that shared file that says audit, and all of that data is there. And what I do is every year I have an exact same separate folder for each year that has the same folders that I then move that same data. And let me tell you why. And it's good to know this, because sometimes even if you have the same auditors every year, they may come with specific auditors. Auditors move on. You may have the main primary leader or the manager there, but he may have separate or new auditors. And they may come to you and they may ask you for, well, where's this? And well, I think we need to add to that policy. That's when you have your last year's folder and you said, wait a minute, this is what I provided last year. This was sufficient. I had a successful audit. Why are you asking me for additional data? Push back on them. I've learned to push back, but you can push back when you have receipts, when you have the folders to say, this is what we did last year. We're not changing any policies. We hadn't changed any procedures. If you're asking for additional support, explain to me why. That's why you want to keep a folder for every year you have an audit. Key personnel. When you have an auditor, they want to speak to everyone that's involved. For instance, sometimes they'll reach out to your CEO. Sometimes they'll reach out and want to speak with your finance committee or audit committee if you have board members. If you are the liaison as an accounting person, and you have, they may say, let me speak to who actually received the funding agreement, so we're all on the same page. If it's not an unrestricted, to say, so we understand the communication and why you are acknowledging or recognizing your revenue and expenses the way they are. So don't be surprised if they ask that. Don't feel that, why are you asking? Those are legitimate questions. And so they want to ensure that everyone is on the same page and understanding the financials, even if they're not doing the financials. And communication, maintain the open and consistent communications with your auditors as well as your staff and your team. So what I would always do with my team, I'd let them know I'm going to be in an audit. They may reach out to you. Do you have questions and concerns about what they may ask you? Because if they do, I'm like, okay, I want to talk to you before you talk to my auditor. So if you have key personnel that you know that they're going to speak to, you say, are you okay with speaking with the auditor? Do you know that your conversation, what you need to say? Schedule a meeting with them for 30 minutes and say, okay, this is what I need you to say. Are you okay with that? Are we on the same page? Because you do not want that auditor to reach out to, if you have restricted funds, and reach out to your, what we call development person. And she may say, oh, I didn't know that that's what they were doing. Is that what they're doing? You don't want that. You want to be consistent. You want to be on the same page as your organization to your auditor, because it's like anything else. If there is a lack of communication and there is a mix of communication, it's going to require you to be able to provide more information. And it usually just requires them to dig a little deeper. And if it's not necessary, try to prevent that by having that communication with your internal team before you start your audit. Communicating with the auditors. Of course, the first thing is a given. Always be responsive, be honest, be transparent. And always say, as we spoke earlier, if they reach out to you for a specific data or to meet, try to make that meeting or try to have a turnaround with no less than 24 hours or 48 hours. Because like I said, you don't want them later on to say, we're off target. because we tried to reach you. We tried to schedule time to talk to you. Now we may have to push back. Or I've had auditors to say, hey, we have schedules of other clients that because we couldn't meet with you, we have to go to our other client and come back to you. So during audit time, schedule and tell your staff, I have audit coming up 2 months. I'm not going to put a lot of extra work on my plate. I need to get it done because I want it to be completed and we move forward. I always make my audit time as like, this is the major mandate, especially as a CFO, especially if you're an accounting person, your audit date and timeline needs to be important and you need to stick to it. Ask questions. Push back. Feel comfortable in pushing back. If you don't know, you're not going to know it. If you don't just, here's the report, take it, sign it, moving on. Read that report. If you don't know, it's nothing wrong with saying, this looks great, but I'm a little confused. Can you help me understand this? Feel comfortable. You're paying them for a service. That's what they're there for. They're there not only to audit your service, they're there to help you understand the renderings of their report and how they found the financial structure of your organization. So if there's something in that report that you don't understand, push back. Say, thank you, but can you help me understand what did this mean? Because if you don't understand it, you can't improve it. So be comfortable in asking the necessary questions. Be comfortable in pushing back. And of course, maintain that professionalism. There's nothing wrong. It doesn't mean you're unprofessional if you ask a question. So that's important, but please understand that audit. Because especially if you have a board, I've had auditors to give a management letter to some people that I know, and they just forward it to the audit and finance committee, and they were in a lot of trouble because they didn't understand the implications of that letter. And they would send it to me and like, I got in a lot of trouble. I'm like, didn't you read this? Don't ever forward a management letter to your manager or your audit or compliance or audit and finance committee without understanding what's in that letter. So the data request. So as I said, when the auditors come in, they're going to have a standard request of data that they need from you that is pretty much consistent across the board as it relates to your organization. And that's called a PBC list that's provided by the client. And during the interview process of, with your personnel and gathering that information, they'll assess the internal controls that you have to say. We have, if he comes in and you said, we have one accounting person. And he says, well, what do? You're processing payroll, you're processing accounts payable, you're getting money, and you say you have one accounting person, they're going to already understand the initial internal controls situation that you have. And then they're going to ask we need to perform some financial test to make sure that you're in compliance of what from an accounting perspective. So these are some of the things, as we spoke earlier, that the data request, the standard audit policies, they're going to want your employee handbook. They're going to want your organizational bylaws. They're going to want your bank statements, but they also want to see the bank reconciliation to show that you're showing that, yes, I had $1,000 at the beginning of January. We got $2,000 in donations. We spent $50, and the balance that's in the bank, I've reconciled to that. That's your cash receipts and disbursements. If you're processing payroll, if you're within grant compliance, and that's, as I said earlier, based on the agreements from the funders that you're in compliance on that SOW, which they call scope of work, that funder is requested, in any other related transactions as associated with your organization. So, as I said earlier, the PBC list is a document that outlines the information and supporting documents that the auditor will need from you to conduct the audit. So I actually provided, excuse me, what it's coming. I'm gonna move it over. If you can see this, I provided what a general PBC list looks like. They're going to want your financial statements. And that's going to be your income statement, your balance sheet, your statement of cash flows, and statement of changes in net assets. And that just means your profit over your expenses is your statement of changes in assets. So
I want to continue this conversation with X, Y, and Z person. We talked great things about this and like, you know, almost having like my personal plan of action for after this retreat, that like, I'm going to bring this to my next sub-team meeting, because I started a great conversation with, you know, with Lillian about how my work and her work connect.
okay. So this is, I'm sorry. So this is, as we talked about the PBC list, I don't want to go through everything that's here. Some of the things we said here, the internal controls, the org chart, the job descriptions, policies, procedures, minutes of the board meetings, legal agreements, and insurance certificates. What I think I wanted to share that you would be surprised that if you have a board, the implications and the importance of minutes from the board. Because I'm just going to speak currently of what I just experienced with my organization. A lot of changes happen at the board meeting that could change how you're currently actually doing work. And so if you have a change from last year processes and procedures to what they are now, but they have been implemented by the board, then your auditor is going to say, I need the minutes from that board to be able to ensure you're still in compliance. So that's why some people think when they're thinking about audits, they're thinking about the checks and balances of a transaction, a donation. They're thinking about a deposit. They're thinking about, you know, if we had a debit to our bank account. But your audit also encompasses a lot of things, and that your minutes from your board meeting, your bylaws, your employee handbook, all those things helps to substantiate your financial structure of your organization. So I just wanted to share that with you as well. So at the end of your audit, your auditor will reach out to you and say, okay, we have the results, or what they call the auditor's findings and reports. And as I said, they're going to give you a report, and they're also going to issue you a management letter, and they're going to issue you your financial statements. And as I said earlier, review that audit report carefully to understand everything that is in that report. Everything. Do not feel like, I don't want to waste their time. It's a lot. I don't want them to think I don't know what I'm talking about. You know, it's already been a long audit process. I don't want to delay. No. You need to make sure you understand everything that's in that audit's opinion and that audit's finding of your organization. Because the audit's opinion can impact the management letter. The management letter is what the auditor then will say, thank you, accounting team. Thank you, CFO. Now I need to write a letter to management of telling them what we found. Now, what you want them to say is everything was fantastic. We found no material issues. So material means that it's something outside of the norm. It means it was more than what should have been in compliance for the organization. That's what material means. So you want them to pay a close attention to that management letter because they can say what we spoke of earlier. You have a material weakness because you do not have enough staff to ensure you're in compliance of your organization finances. They could also say in review, there were several months that the bank reconciliations was not consistent. We could not, what you don't want ever to have is for an auditor to say, we can't even finish auditing your books because your financials are not correct or not in the compliance of what we normally would see. That you don't want to have. Let me say, I've never had that to happen under my watch, but I have heard of that happening to organizations. After you would receive the management report that if you have any ability to push back and have them change some of the language in your management report, if you have that ability, do it. But if you don't have that ability, get ahead of it. Reach out to your CEO or who the top person is in management and say, listen, we just finished our audit. I got this management letter from the auditors. Let me explain to you what's in this and how I see us correcting this and going forward. We anticipated this happening. Create the narrative. And never say like, oh, I didn't have a clue. I don't know how to fix it. Always have a narrative of how to fix it. Even if you have to rely on the auditor and say, and all the other clients that you have, how have you seen them being able to correct this objective that you have that you put in my management letter? But when you go to your manager, get ahead of it. Let them know you're in command of it. Let them know I see it, we're going to take care of it, and it won't happen next year. And lastly, they're going to give you your financial statements, the results of the audit. And it's going to be your audited financials. Well, then, if you're in good settings, you will have an accurately financials that will reflect the overall position of the organization. Good or bad, that's going to be your financials for that year. And I always say it's a teachable moment. So don't ever feel like that you've got an audit that, what am I going to do? Every year, your audit is a teachable moment, and you go into it knowing this is my opportunity from now going forward to make the changes that needs to be done. So next year, we will not be in the same place. So next year, we will be in a better place. And if that involves us communicating out to staff so they understand the implications of what they do, as well as the financial team that is actually doing the actual accounting work. So, as I said, there is an audit report, and that will be their thoughts as regulated from pronouncements of what the audit is supposed to be. And what I mean by pronouncements are the statements and guidance that governs how an auditor will conduct your financial audits. So, like I said, they can't go out and say, oh, I think you could have done better. Yeah, I think you could have done. No, they are acting based on laws and pronouncements of how they have to conduct themselves as your auditor. So they will have a qualified opinion. They will have an unqualified opinion. That tells you your statements that they are presented fairly in all material aspects. You want them to have their opinion to be favorable and the end result for your audit. Okay, I see your question, Charity, and I will in the end. Then, as I said, your management letter. Your management letter is not included in the audit report. Your management letter will actually be only shared with your management, and usually that's the CEO and whoever else is mainly in charge. The audit report will actually be part of the financials, and if you share it with your board members, if you share it with your finance committee, those things will be part that everyone can see. Management in general, they want to just highlight the things that they feel that either you're doing well or things that they need you to improve. And some of those things, as I said, are internal control weaknesses. If they've identified anything that they feel needs to have improved. And this could, like I said, could be as simple as segregation of duties, lack of proper documentation, inadequate oversight. You can always get ahead of, segregation of duties, as I said earlier, and go to your CEO and says, yes, the narrative is we don't have enough staff to support the controls of segregation of duties. And so if I part anything to you is always get ahead of it, always understand the implications of having a narrative. And this is just based on the management letter, their suggestions, how you can improve what you're doing, things that they flag. The financial reporting observation, may include how things can be improved internally and externally. And these are your audited financials. What they will provide to you is your income statement, which in nonprofits, we refer to that as your statements of activities. Your balance sheet is your statements of positions, and then your statement of cash flows, just to ensure that they can look at and to say you have enough money in the bank that can carry you for 1 or 2 or 3 months. Your cash flow will be able to help to support as you manage the finances of your organization. And this is the benefits of a successful audit, and improves your financial management and enhance credibility internally as well as externally. It meets your funding requirements. As I said, as your funder, if you do not have a 990, almost every funder will ask you for a copy of your financials. So it helps in meeting the funding requirement and increases your ability of getting grants. And it also improves the fiduciary responsibility of your board and their oversight. And then the improvements, right? So when you get an audit, and if there is any irregularity, it helps you in moving forward to say, we're going to do better next year. This is what we're going to target. This is what we're going to do. Bringing in, making sure all staff, because let me say, one of the biggest things, if you have staff that I've always had problems with, is making all staff realize your timesheet and your time card is important, especially when you have restricted grants. And I would always use the big A word, and A word was audit. And I was always telling them, we're not going to have a successful audit because you ain't doing what you're supposed to do. Believe me, everybody's eyebrows would raise at that point. Like, oh, I used the big, I weaponized the word audit. Whenever someone wasn't doing what they're supposed to do, and I'm waiting on a report, I got $100,000 in the bank. Where is it coming from? Can someone tell me where it came from? I should have a copy of the agreement because I'm going to need that agreement at audit time. So usually throw out the word audit. We want to have a successful audit. I need you guys to work with me to ensure that we're doing that. And thirdly, always have regular reviews. Look at your financials. Look at your monthly reconciliations or quarterly reconciliation of your accounts. Review them, make sure they're in line of where you should be. And lastly, we have, time for some question and answers. And I want to, Charity says, for a small organization, can you advise on when it's appropriate to have a financial review versus an audit? Well, some people, like when I say something, some funders request an audit, right? They're like, if you want to receive my funds, I want you to have an annual audit. If you do not have to have an audit, I would not say not do it, but there's a lot of implications and time around an audit. But if nothing else, have a financial review, because you do want to ensure you're in compliance. You want to make sure everything is being done correctly in your accounting. So that is what I'm saying. Make sure you do that. So we're supposed to have a 15-minute break. If you guys want to take a 15-minute break, because we have only like 20 minutes to finish, I want to leave that up to you. I say maybe take a 5-minute break and come back and we can start. I want to talk about the 990, but I want to leave that totally up to you all how you would like to do this.
5 minutes is good for me. And can I ask a question in between? Thank you.
Sure. Let's take a 5-minute. Please put your question there, or I'm going to just stay on. So if anyone wants to talk through, so let's come back at like right now 1:17, and let's try to move forward and try to talk on the 990.
Opal, thank you so much for this. This has been so good, so informative. And I just am so glad that you're part of the advisory board for EBC. Like, this is great information.
Well,
Great.
thank you. I think, let me just say, I want to state the obvious. I don't have to, I think, as a Black woman in the finance industry and organization for the last 30 years, I know the importance of ensuring that you are at the top of your game, professionally knowledgeable. And I want to share that with, the organizations that EVC support. And it's not always easy. That's why I've made mistakes over the last 30 years, from being an accountant to a controller to a CFO. And I've learned from my mistakes. I've learned to push back. I've learned not to just accept everything that they tell you. So that's why I want to impart that with everyone on this call, that, feel empowered to say, yes, this looks good, but I have questions. Don't feel
Right.
uncomfortable in saying or thinking, oh, I don't want to look like I don't know what I'm talking about because I asked this question. That's the way you learn, is to
Yeah.
ask. And so
Yeah.
feel comfortable with that. Feel, emboldened to do so, and don't feel that it makes you less. It's going to empower you in moving forward.
Yes, that makes so much great sense though, Opal. Because sometimes we get into the position and we don't want to lose what we have, and we don't want to compromise what we have. We don't ask the important questions that can take us a little deeper.
Yeah.
So thank you so much for sharing that and putting that out there and giving us empowerment and confidence to be able to go out there and push back.
And let me say one thing too before let's promote this sisterhood, that if you have a question, reach out to someone and say, hey, this is what I'm doing with my organization. Does this make sense? Have you ever heard of someone else? Let's promote this level of sisterhood, that we can feel comfortable in building that professional knowledge and being
Yeah.
able to share that professional knowledge. Because things change. That's one thing that's positive, that nothing else, believe it's going to happen. And so reach out and say, hey, we're doing something different. Have you ever heard of that? Have you heard of anyone else that's doing that? And create that authenticity of a relationship, that someone will say, yeah, I've heard of that. Or no, I don't think you should do that. That may not be in your best favor. Feel comfortable in having that relationship with people that look like us, that are facing the same challenges that we are, we can help each other.
Yes,
And let's plan to make sure we do that.
yes. Nicole has a question for you.
Good afternoon. My question is small nonprofit. We started in Irish Food in 23. I've been writing grants and some of them have been asking for audits or 990s, which we don't have yet. We just got our first small grant last year, like literally $10,000. And so I guess I'm trying to figure out, should I do an audit this year? Because to start building that track record, although it's like a third of the little money I got, even if I have to do it out of pocket, because like that way I can, when they start asking for two audits or two 990s, I have that. What are your thoughts?
I think this is what I think. I think the fact that this, like you said, you have your small first donation or contribution, I think you have to look at that as you're going to build on that. Because it's going to be an investment for you to get an audit and get the 990. There's a fee and a service for that. But you have to look at sometimes what we call the return on our investments, the ROI. That investment that you're going to make to have that audit and to have that 990 is going to build on the future of your organization. Because then they'll be able to see, okay, they're in compliance. Yes, build that information in that 990 that when you share that out to that particular funder, they can see everything that you do. You have to start patting yourself on the back and not saying, are we doing that yet? This is what the capacity of your organization and your mission. This is what, if you're not doing it, but this is our potential. This is what we're going to do. Make sure all of that information is in the 990. So potential funders will like, this is where I want to invest. This is who I want to invest. So look at this initial account, the auditing and 990 as your investment for the future.
Yes.
The return on that investment will be worth it after you bought on new funders and you've created that avenue and option for yourself.
Excellent. Thank you so much.
You're welcome. So let's start. I'm going to kind of go through this, but what I want to do is, as Jeannie says, we're going to share this PowerPoint with everyone. Feel free to reach out if you have any questions. I'm happy to support and following through and helping you. And like I said, when I talk about that sisterhood, I'm talking about myself too. I'm happy to make myself available. Reach out and let's have that conversation and build on us getting better, supporting each other so we can be at our best. So understanding the Form 990. So the form, let me say too, when we talk about bringing on an auditor, if we have the choice, let's find out, can that auditor audit our books and do our 990? And the reason I say that is because a lot of the information that's in your audit flows to your 990. So if you can get them all together and have a consolidated auditor that'll do both, that's fantastic. And the 990 form is your annual information return that requires IRS, all 501c3 organizations to file a 990. A lot of times it's based on your total revenue. And initially it was like anyone that is making or receive over $50,000 a year, they recommend that you have an audit and you have a 990. And it provides, like I said, the detailed information about your nonprofit, finances, operations, and governance. And it helps you to maintain if you're a tax exempt status, your 501c3 tax status. A lot of times they require that you do an annual filing. Most of the time, the most that you can miss is maybe 2 years that you don't actually file a 990 to stay within compliance, but usually you should have an annual filing of your 990 based on your audited financials. So I'm going to go through this a little faster, but please feel free if you have any questions, add them and I will try to answer them. And as I said earlier about, normally nonprofits that have less than $50,000 in contributions or revenue, they'll file a 990N. which is a very short and abbreviated 990, but the actual form 990 is a more longer version. If you click here, once you get this, this will actually show you an example of a 990. It's a lot of information. It is a lot of information here, but it provides so much information for the funder to see. If you have board members, it lists the boards, it lists if they're getting paid, it lists the higher, it'll list the high, what they call HCE, the highest compensated employee. Initially, it would be you had to have a salary of $130,000, but it's really anybody, the highest paid employees of your organization is also listed there. It talks about your revenue, your expenses, and as we talked about what we call functional expenses. The functional expenses, as we said, is really relegated to restricted revenue because in the scope of work, it tells you, I want these funds to go to the program. And we have 3 different categories, which is general administration, fundraising, and programmatic. And so when your funders are seeing your 990, they want to ensure that you have those 3 categories there, and they want to see at least 75 to 80% of your expenses allocated in that programmatic expense column, because they want to ensure that their funds, especially if you have funders that have given you money with restrictions, they want to make sure, okay, my money went to where I've, specifically said I want those funds to go. So these are the 3 categories: the program expenses, the fundraising expenses, and the management and general expenses. And the key information on the 990 is it'll have your mission statement and program activities. So when you look and you see the program activities that's on your first page, it'll say, what's your program activities? What's the revenue? What's the expenses? Use that to make sure you put as much information about your program for those dollars coming in. I've gone to some 990s and it will about like barely, 1 sentence. You want that funder to see, my organization, we are doing work on behalf of ensuring, teenagers or young ladies are being educated, and, we're doing these programs. You want them to see all of that. You want to provide as much information there as possible. That is your report card to the funder. That is your report card to the world. You want them to pat yourself on the back, say, this is what we're doing good, and I want you to know what we're doing. Take the time. It's almost like a marketing tool to put your best face forward, put everything there so they can see where their money is going. They want a list of, like I said, your board of directors and their information. Then, like I said, the HCE, which is your highest compensated employee. They want to know. And the reason that is, and I don't know if years ago you guys, are familiar, they don't want to see that you're an organization and you have, say, I'm going to say you get $150,000 in revenue and your employees are making $110,000, because their goal is to see that you're there to support the program and the mission of your organization. And it actually is because years ago that a lot of misappropriation of funds were happening, and staff and the top CEOs were getting paid so much money in the nonprofit arena. So now this is their way to say, okay, if you want that exempt status, then you need to show the world what you're paying people. And that's the reason that is there. And then you want to see the related organizations and transactions. It'll ask, how much did you receive from funders? All of that information is in your 990. It'll ask, did you have contributions? Did you have restricted revenue? How much did you have investment money? It breaks all of that information down. It's going to be visible on your 990. And who should complete the 990? Who should understand what's going to be in that 990 is your CEO, your executive director, if you have a finance director, accounting manager, CFO, the bookkeeper, the accountant, if you have the treasurer, all of them should have impact in understanding what's in that 990, because that 990 is a representation of the organization. And if it's not fully, have the information there, it's going to impact the organization. So you want to make sure that the executive director is maybe going to have a different language and narrative than your bookkeeper or your accountant or even your treasurer. That's why when you're doing your 990, reach out and say, hey, this is what we're going to put out there. Do you think we need a little bit more information? Do you think the funder that we're going after, that we're going to attract, do we have enough information here that will make them say, wow, this is great? Think about it when you think about, these big funders that are giving away millions of dollars to college and universities. They hire a team of people to go in and pull those universities and organizations 990s and their financials. And they say, go in, scrutinize, analyze, are their financials in place? Do they have enough information on their 990 that I can put my money there? So that's why you have to understand the importance of that 990. Make sure you're putting your best effort. Use it as a marketing tool. This is who we are. This is what we do. This is the best that we're doing. And this is why you need to invest in us. Put that in your 990. And as I have here in red, your auditor can complete your 990 and file it for you, because a lot of the financial information will come from the audit. The narrative and the language you want to promote your organization, you can communicate that to your audit and they will complete that language in your 990. Make sure before anything is finalized, you have last eyes on and you have final approval. And then it's like, this is what the funders are looking for: financial stability, program effectiveness, good governance, alignment with the funder priorities. That's what your 990 is revealing about you to those funders. And that's why you want to make sure you check off all those boxes. Don't take it for granted. They're like, oh, they're going to know what we do. They can read between the lines of what we do. No, don't take that for granted. Do not take that for granted. Make sure you let them know what you do. This is what we do. This is why you need to invest in us. And that's why I always tell people, your organization's report, your 990, is the report to the world. It's visible on your IRS website. Anyone can go in and pull your 990. I went in and pulled the 990 of some of the organizations of some of you all that are attending. So that's how visible it is. And that's why you want to make sure it's correct. And your 990 communicates your impact on the public, and it impacts of the implication of what your mission and your vision is for your organization and the public that you are supporting. And finally, how do you file your 990? If you have an auditor, they will do the filing for you. But if nothing else, you can always e-file your 990. And you have within 15 months after the closing of your fiscal year to step back and file your 990. So don't be in a rush. The audit's over. I got other things to do. I don't have time to look at that 990 right now. Let's just file it. No, you have 15 months after the close of your fiscal year to file that 990. So make sure you do your due diligence and you go in and make sure that 990 looks like and conveys everything you want the public and those funders to see about you and your organization, that they want to actually cut you a check. So this is the
I have a quick question. I'm sorry.
No, sure.
We got dinged the first year that we had to file a full 990. We didn't file it until a year later after the close of our fiscal year, and we got fined. And we were told that so then we hired someone to do it. And we were told that we have to do it 5 months after we close our year out.
Well, so and let me say this too. I have been told the same thing. When you look it up, and so because that's the same thing my auditors say. I usually get it done, but I wanted to be correct in when you actually go in and you research, it says 15 months after the closing of the fiscal year. But so I'm going to research that and get back with you so we're all on the same page.
Because we
And
got fined over $1,000.
because it was within 5 months after the
No, we
close.
filed it after 5 months. So our fiscal year closes September 30th. And that first year that we had to do a full 990, it didn't get filed until a year later, maybe not even a full year.
So let me find out that. Let me check and I will see why that is.
Yeah, because we had a company, we have a company that does our 990s.
does it
We have
for
an
you.
accounting firm and he filed it. And he wrote to me and he wrote to our finance officer and said, they might overlook it. He goes, and I did he put in an, he requested that they waive the fine and they didn't accept it. They didn't waive it.
So this is the thing. Confirm that he filed it when he was supposed to.
Oh, no, he did. He did.
Okay.
We get receipts for everything. Everything that he does, he copies us on it and everything. There was no issue with him. He told us when he first looked at it, he said, you might get fined, but I'm going to ask for a waiver. And he applied for the waiver and they would not give us the waiver.
So I'm going to confirm that because I want to make sure that I am not passing on bad language, especially when it comes to filing and being in compliant. And so let me say to you, my auditors, I usually always get it done as well within 6 months. But in building this presentation, I did a little research and that's actually what comes up. So I want to follow through and correct that because I certainly do not want anyone getting fined if I'm giving inconclusive or bad information. But I will follow up on with that. And before I share this presentation, I will correct this to make sure what I'm saying is or is not correct. So thank you. This has been great. Did you ladies have any questions before? Am I missing any other questions before we end the session?
So, yeah, so the other question I had was, so I didn't realize that the 990 and the tax returns were not connected. So you can file your tax return and then later file the audit afterwards, like what? That's what you're saying.
So your audited financials have to happen before your 990. So
Okay.
because the information from your audit is actually what is actually communicated in your 990.
Got it.
Go to your
And so what's the best practice for filing the audit? How long after the year closes, fiscal year closes?
So usually you can have your audit within 5 to 6 months after you close your fiscal year. If you actually engage with an auditor that will do both, and you bring him on to do your financials, he then will take it upon himself also to complete your 990.
Right.
Because if not, it's a lot of work to complete that 990. That if you can find someone that will give you a reasonable assessment and a cost, I would suggest getting the same audit to complete your 990.
He says a lot of work. Is it more than the audit? Like,
no, it's not.
right now, I don't have anything much to put in there, but so I guess that's why I'm like.
Yeah, it's not that it's a lot of the consistent work is pulled from your financials to your 990. So I mean, that's totally up to you. I've heard of people doing it separately, but I mean, me personally, myself, I prefer that the auditor, once I've confirmed the financials and approve it, and after he closes my books, and then work with him also to complete my 990.
Sure. Got it. Okay. Thank you.
Okay, well, thank you. And like I said, thank you so much. I appreciate your time. I will definitely follow up on that, what I have here about the filing of the 990. As Jeannie says, I will be sharing this presentation with you all, and I will make sure that information is cleared up and corrected before this presentation is shared. But please feel free, for any reason, I'll give you my contact information. Feel free to reach out to me if I can engage and help in any way. I'm happy to do so.